What's good, YouTube? Welcome back to my video. So today I want to talk to you guys about Sofi. I want to go ahead and go over the earnings report and the earnings call, pretty much summarize everything, explain to you guys why the stock has dropped, why I think it is an overreaction, why I believe this company is very good in terms of the long term and I'm still very bullish on it. And then I will go over what is in the pipeline for this company. Everything I do say is not financial advice. I can't predict anything in terms of the short term, but I do believe, and this is only my personal opinion, that the company is very, very good fundamentally in the long term. But before I do get started, I just want to give a shout out to ChampionVibe. So if you guys want to go follow him on Twitter or join his Discord, he does do he does review charts and does ticker requests for people. He live streams every single day when the market is open the following day. Goes over the overall market, and then if you put in the chat your ticker request or whatever stock you want him to look at, he'll actually be able to chart it for you and basically tell you, go over the technical analysis of the stock. So let's get started. Sofi dropped about 12% after hours. When the market opens, when you guys are probably watching this video, the price may be different, but essentially what happened is the earnings per share number came out and the stock went down 14%. And let me show you. So at 4:12 they announced that Sofi's EPS was negative 48 cents and they were expected to get negative 6 cents. So there's a huge difference of 42 cents per share. And this is a huge miss. And what has happened is literally the stock went down and just dropped 14% after they announced it. And essentially what they didn't mention, or they failed to mention at the beginning, and they mentioned this in the earnings call, is that they had a one-time payment of $21 million to Social Capital, which is Chamath stock. It was a SPAC stock, and they're the ones that brought Sofi in the market through merger. So essentially, they had this one-time payment, and the CFO said if you ignored that one-time payment, their earnings per share number would have came out to negative 5.8 EPS, which would have been, they would have beaten their EPS number, they would have beaten their revenue number. As you can see right here, they've beaten it by 18.6 million. And it would have been all green and probably the stock would have went up. But then they went ahead and announced that they are lowering their guidance, and I will be going over as to why they're going to be lowering their guidance. So here is the numbers. So some of the numbers here, I won't just go ahead and read through it. If you guys want, you guys could pause and read over it. But I did want to mention here is that their total numbers of members has increased 113% year over year to 2.6 million, and their total products has increased to 123% to 3.7 million at quarter end versus 1.6 million just last year in Q2. So as you can see, they are going pretty well. And what I want to really talk about is in terms of what affected them and why they lowered their guidance. So there's two reasons as to why they lowered their guidance. Number one was in regards to student loans, and this has actually affected them. So they're well known for student loans. They were hit due to the CARES Act, and they're at less than 50% of the pre-COVID number. So a lot of people aren't paying their student loans, and they got because of the CARES Act, they don't have to pay until January 2022, or they're only paying the interest portion, so they're not actually making full payments, so they don't need to refinance their debt. And because they're not refinancing their debt, and this is the number one way that Sofi kind of attracts customers, is by refinancing student loans. So they lowered their guidance in terms of that because the CARES Act extended until January 2022. And the other one was because of their 5-year guidance. They essentially bought Apex, or a portion of Apex, an equity investment, and they were expected to make $12 million in revenue in 2021, but I guess Apex went ahead and called back their investment, and they are no longer expecting to make that $12 million in 2021, which is going to, and in the future years, which is going to be affecting their revenue number and their guidance. So that's the thing that really caused them to drop. Now, in terms of the good things and what is going on in terms of the pipeline, And as you could tell, after they started announcing what's going on in the pipelines, the stock started going back up after hours, and it went up about 4.5%. So they went ahead and said that they're going to be focusing on products, like the individual products itself, but their main target is to have everything bundled. So they want for each client to have multiple things. So they want investments, personal loans, money, credit cards. They're trying to get as many people to get multiple things at once, and they're going to be doing certain things to get that. So essentially, if you bank with them as an example, and then you get a credit card and you get other things, they save on these cost acquisition. And if you guys don't know their cost acquisition numbers, I've done a video about last year going over all the numbers. But essentially, because they're going to be saving these cost acquisition, they are able to give you better rates, better prices, no fees, better offers, and they're going to be able to match or beat everything that is out there in the public. And what they're calling this is a financial service productivity loop. So they're able to loop everything in together. Essentially, as an example, let's say you invest with them and you have a personal loan with them, and you invest with them, and then you want to get a mortgage. If they see that you have bank with them, they'll give you a lower rate. If they see that you invest with them, they'll give you an even lower rate. And the more products you have, the more you'll save in terms of interest, or in terms of getting more rewards for your credit cards. So that's what they're kind of doing, and it's not something that other financial institutions do, so it's kind of something different. And what they're doing, and it's very, very interesting, is called the snooze feature. So essentially, you're going to be able to lock in your low interest rates right now, because COVID is happening. All these rates are really low. You're going to be able to lock in your rates right now and save them for 2022. So if you do have a refinance that you want to do, and it's not due until 2022 because of student loans or because your mortgage, you'll be able to lock in your rates right now and carry them over until next year. No other financial institution is doing this. The most you could lock in your rates is, I believe, 3 to 6 months. And they're able to do it for a whole year. Another thing they mentioned is they added 16 new cryptos, and they do plan on adding more. They are going to be the first to offer an IPO investment center, so you could actually go ahead and buy IPOs before they become IPOs. Just like hedge funds and all these billionaires are doing, you're going to be able to participate in that through SoFi. And they're actually doing something very, very interesting. They're calling it a SoFi Weekly. So it is a SoFi ETF that pays dividends, not every year, not every quarter, literally not every month, but they're doing a weekly dividend payment through their ETF. It's going to be one of the only ETFs that actually has a weekly payment, and they're going to be paying this every Friday. So if you do have like multiple millions of dollars with them, you could literally get paid out every Friday and probably live off your dividends. Another thing that they're going to be doing is adding more rewards in terms of their credit cards. So if you set up, example, direct deposit, or you do auto save, etc., when you do cash out in terms of your credit card points or your cash back, you'll be able to get more cash back if you do have other financial products with them. And then another thing they're going to be doing is they're going to be doubling your rewards. So let's say, example, you have $1,000 in cash back. If you move that $1,000 in cash back and invest it with them through SoFi, whether it's through crypto or through stocks, they will double that down. So if you have $1,000 in your credit card cash back, you pull it out, you'll get a total of $2,000 because you kept it with SoFi. And they have a lot more going on in their pipeline. So as you can tell, I'm very, very bullish in terms of the long term if they're able to produce this, and it looks like they are on the right track. Obviously, they're down in terms of their income. They are showing negative, but this is very expected for a company that's growing. Every company you could think of, or not every, but a lot of companies that you could think of that always start off negative in terms of their income. Tesla and any company you name it that went through a growth period, they usually start off in negative. It's just a matter of can they keep a positive balance sheet and not really get themselves too much into debt. Another thing that they're going to be doing is they're going to be using the data. So let's say you're paying bills or you're paying certain credit cards, they'll be able to see what you're doing, and they could actually give you better offers. So they could give you targeted offers. Example, if you're paying your student loans every month, they could go ahead and give you an amazing refinance percentage, so you could actually save on interest. or if they see that you have a credit card, they could probably give you special offers so you can switch your credit cards over, etc. So they're doing that in order to save in terms of acquisition cost. And last thing I wanted to talk to you guys about is in regards to, or there's two things in regards to monetization. One of the analysts was talking about monetization, and they were saying that they're still too early to monetize. They're just focusing on gaining as much customers as they can, as much products as they can, and then from there they'll be focusing on monetization. They're going to be doing options investing through margin in the near future. And one last thing I wanted to bring up, which is kind of a positive thing, is their Galileo technology platform. It more than doubled their clients, and they're up to 79 million clients as of right now, and they have about $100 billion in annualized payments through their Galileo technology company. So SoFi does own them, and the money that they are making goes to, at the end of the day, SoFi. But that's pretty much a summary of everything. Obviously in the short term, I don't know what would happen. If you guys want some technical analysis on the stock, I suggest you go ahead and follow ChampionVibe, join his Discord, and from there you could go ahead and post request any stock that you'd like, including SoFi, and he could do technical analysis for you. But other than that, that's pretty much it for today's episode. Please like and subscribe, and peace.